to another session. We are dealing with financial accounting theory. Now, in financial accounting theory, these are areas that we need to be acquainted with. So we'll do the introduction. So in our introduction, we have these critical elements. As we deal with introduction, we look at the meaning, definition, then objectives, nature, formulation, distinction, and then reporting environment or financial reporting environment. So we start with the introduction. The meaning. What is theory? So theory refers to a set of statements which provides a logical reasons behind events and phenomena. So any set of statements which actually provides logical reasons behind events and phenomena, that is a theory. Explain accounting practice. Now this is what now we call financial accounting theory. Explain accounting practice and guide to keep pace with fast changing environment. It is dynamic in nature and it's based on sound logical reasoning. It helps to build an approach towards accounting practice, serve as basis for the understanding of financial reporting and how companies channel their financial statement using the appropriate strategies. So that's actually the critical meaning of accounts. Now remember, in the financial accounting theory, we have three very important terminologies. We have accounts. Let's look at that. So theory is assumption or a premise which an idea is generated. So a cohesive set of hypothetical, conceptual, and pragmatic principles forming a general frame of reference for a field of study. Now that's according to American Accounting Association. Logical reasoning in form of set of principles, that is, provide general frame of reference by which accounting practice can be evaluated and guide the development of new practice and procedures, that is according to E. Hendrickson. Now this is another person who has given us the definition of accounts. And let me say this, it's very critical. The brief set of principles. Now, when you wrap up, what is accounting? What is financial accounting theory? The brief set of principles, doctrines, convention, concepts related to accountancy evolved by analyzing the accounting practice. So when you talk about financial accounting theory, it's a brief set of principles, doctrines, conventions, concepts related to accountancy evolved by analyzing the accounting practice. So we monitor the practice of accounts and we bring forth the theories which will help us in the recording and preparation and presentation of accounting transactions. So before we look at the objectives, I would like us to have this interaction on the basis of terminologies. Remember, there are two terms here. There are three terms. We have finance, we have accounts, and we have theory. So theory already we have seen. It's a set of rules, regulation, concepts or conventions. And then when you come to now accounts, account is only a process of recording business transaction. Then finance relates to the field of money. So when you marry all the three, then you get the composition of the definition that we have given as a process of doctrine, concepts, conventions, which are normally used in the analysis and monitoring the practice of accounts. Objectives. Now, what are the objectives of account? To evaluate and explain the accounting practice. So it's all about evaluation and explaining the accounting practice. Number 2, to simplify a complex phenomenon. So bringing that complex phenomena into simple form. Number 3, to solve the problem created by happening or various events in account practice. To pre-calculate the effect of an event on future. So we try to foresee what will happen in the future. To forecast any future event. So we look at what will happen in the future as far as accounting practice is concerned. To help in investigation, observation, explanation, and conclusion of event. So when you bring financial accounting theory, it is very important that it will help in the investigation, observation, explanation, and conclusion of events in the future. So remember, we are dealing with the prediction and explanation of what is happening in the future. So key elements of accounting theory. There are some crucial elements in accounting theory that makes it indispensable framework for accounting practice. The key elements include the following: relevance. Now, this is crucial element of accounting theory. Information provided by accounting theories are relevant in all aspects, so it must be relevant. Usefulness. Accounting theory is useful for the compilation of financial reports, of statements. It helps corporate business make informed decisions as regard finances. So it's useful component, it must be useful. Reliability. An accounting theory is reliable. It follows the standard of general acceptable accounting principles. So finally, consistency. This is another key element of accounting theory. So it must be consistent. You can use it consistently. Features. Practice originated. Formulated on the basis of present practical situation and problems. So we bring in financial accounting theory from what is happening on the ground as far as accounting practice is concerned. Flexibility. Flexible to incorporate changes in the scenario. So the account must be flexible, the theories must be flexible so that we can apply in different critical areas. Logical accounting practice. It provides logical framework to the accounting practice. So we use logic. Learning. Now, what are the merits and what are the better accounting approach? So the theories will help us in initiating a better accounting approach. Number 2, increasing the efficiency of accounts. It makes the accounting or recording of business transactions effective and efficient. Justifies accounting practice. It will justify the accounting practice. Then easy detection of defects. So it will be easy to actually identify where the problem is. Choice of best alternative becomes the solution. Easy solution to various accounting problems. Now, better fulfillment of objects. So these are merits of financial accounting theory. Now, what are the setbacks? Depend on accounting practice. So it is only dependent on accounting practice. Number 2, statutory requirement. It's actually a requirement. It is a requirement in the constitution of a country. So we need to have this in mind that these accounts are mandatory. Number 3, confliction. There's a confliction between historical accounts. For example, when you are recording business transaction, we actually bring in the historical cost and the market value. Historical cost and the market value. So there is confliction between historical cost and market value. Alternative treatment. There's no other alternative treatment. Accounting theories. Now this brings us the distinction between different accounting theories. So we have here accounting theories and accounting practice. So practice is the exercise that is being done in the accounts. Accounting theories. So what is accounting theories? From the definition perspective, it explains practice of accountants. So accounting theories will always explain the practice of accountants. Accounting practice states what accountants do in practice. Rules and regulation, that's number 2. It sets of rules and regulation. It's a set of rules and regulation. It is an application of such rules and application. So in practice, you make it happen. In theory, you set rules and regulation. Asset. It is an intangible asset. It is a tangible asset. So intangible means you can touch, but tangible you can see it, you can practice it. Logical. It is always logical. It may or may not be logical. Beneficial, not directly beneficial to society. But when you talk about accounting practice, directly beneficial to society. Dynamic, it's less dynamic. But now when you come to accounting practice, it's more dynamic. Acceptability, has universal acceptability, does not have universal what? Acceptability. So accounting practice, it's different from different countries. So we need to have this in mind. Accounting theories are critical component in the field of finance and accounting, or in financial accounting. So in our next stage, we'll be actually looking at formulation of accounting theories. Thank you so much.